In the last briefing, I mentioned opening a short position at 80k. Right now, the price was blocked once at 79k, but if it hits 80k, I plan to open a short position. What I'm looking at most importantly right now are oil prices and the dollar. Crude oil, which had dropped to $80, is showing a recovery trend again and is putting pressure on the market. This is a result of geopolitical risks between the US and Iran being reflected. Although there was a brief relief rally on news of a ceasefire, since there's no news of an end to the war yet, if there's no progress in negotiations during the ceasefire period, the market could face another big shock. In the case of the dollar, there are signs of another rise, and it's knocking on the bottom of the channel on the monthly chart. If it doesn't break the bottom of the channel and receive support here, a strong dollar market could unfold again. If the dollar strengthens again, funds from the stock market will move to bonds and act as a catalyst to end the current rally. In the case of the euro, which is an asset that moves opposite to the dollar, it's been trying to rise by knocking on the top 3 times, but it looks difficult to go upward. Since the dollar and the euro move in opposite directions, a fall in the euro can create a rise in the dollar. The reason I'm focusing more on exchange rates than Bitcoin right now is because I believe exchange rates are currently shaping the stock market. Although Bitcoin has been showing a rising rally throughout the month of April, I don't see this rally as healthy. If the dollar rises again, it will also affect the rise of Tether, and a rise in Tether can trigger a fall in Bitcoin. Bitcoin is aiming to recover the 20-week line on the weekly chart, and the 20-week line is the average unit price for most investors. If it fails to recover this and closes out April, some disappointment selling could occur. This is true not only for Bitcoin, but also for Ethereum. Ethereum is aiming to recover the 200-week line, but it doesn't look easy. The 20-week line is just about to dead cross the 200-week line. A dead cross doesn't necessarily mean a shift to a decline, but since the market is extremely unstable right now, it's not a good signal. Lastly, the asset rotation part. If you want to see the asset flow of a large cycle, you can look at the positions of growth stocks and value stocks. Since growth stocks and value stocks move exactly opposite to each other, if growth stocks rise, assets like the Nasdaq, S&P 500, and Bitcoin will benefit. Conversely, in the case of value stocks, money moves to safe haven assets like gold or bonds, so you need to identify the positions of both and know where the market funds are moving. Right now, the growth stock index is showing strength, but if it soon falls into a weak zone, the market could temporarily shift to a downward trend. If you're in a profit zone right now, you need to realize some profits and prepare for the upcoming risks. Recently, the amount of Bitcoin deposits into exchanges has increased significantly, and looking at past data, Bitcoin exchange deposits have triggered a downward trend. Right now, large funds have moved to exchanges, creating an environment where a downward trend is likely to occur. Please be cautious with your investments.